Welcome to my deep dive into Noble Corporation PLC, ticker symbol NE, one of the leaders in offshore drilling. Is this powerhouse stock on its way to $1,000? What makes Noble tick? Where does it stand financially? And what might the future look like for investors like us? Let's break it all down in just over 3 minutes. First off, let's set the stage. Noble Corporation operates one of the world's most advanced offshore drilling fleets. We're talking 27 floaters and 13 jackups. Their clients? Major oil and gas companies, think global giants spanning everywhere from deep waters off Africa to the cold North Sea. Thanks to high demand for their rigs, Noble's sitting on a $7.5 billion contract backlog as of 2025. That's a lot of work lined up. Now, let's get into the numbers. In 2024, Noble pulled in $3.14 billion in revenue. Their gross margin? 43.95%. Net margin landed at 14.69%. Projected 2025 EBITDA is strong, between $1.05 and $1.15 billion. On the balance sheet side, they've got $1.95 billion in debt, but here's the kicker. Their debt-to-equity ratio has dropped from a massive 152% 5 years ago to a much healthier 42.5% today. Free cash flow came in at $275.61 million, enough to comfortably cover debt. Stack that up against competitors like Transocean or Nabors, and Noble's margins shine thanks to a modern fleet and super tight operations. But what about investor returns? Noble is pretty friendly to shareholders if you ask me. The company offers a 7.42% dividend yield, paying out $2 per share each year. In 2024 alone, they sent $575 million back to investors through dividends and buybacks. Heads up though, they're not a dividend aristocrat, so they haven't been raising dividends for 25 years straight. For now, the dividend looks stable, but its long-term growth rides on energy prices and how much cash the company can generate. And competition is fierce. They're up against Transocean, which has lower margins than Nabors. That one's more about onshore drilling. Risks? Oil prices can swing big time, and environmental regulations might push costs higher. On the upside, global energy demand is rising, and Noble's recent Diamond acquisition gives them extra pricing power and a stronger market position. Looking ahead, the picture gets interesting. That $7.5 billion backlog gives Noble solid revenue visibility through 2030. By 2040, investments in low-carbon drilling and offshore wind could open up new income streams. Fast forward to 2050, and the decline in fossil fuel demand could be a real hurdle, unless Noble pivots smartly. Keep an eye on political risks, like carbon taxes, but also on new contracts in Africa and South America, which could be big growth engines. So, the $1 million, or should I say $1,000, question: can Noble stock actually hit that mark? At just $35 today, it's a stretch. Realistically, you might see 10 to 15% total returns in the short term thanks to dividends. Long term, if energy demand stays strong and Noble keeps making smart moves, there's upside, but a 30x jump? That would take a perfect storm. For context, the S&P 500 returned 13.7% in 2024, while Noble was down 35.92%, but those juicy dividends might still make it worth a look for income investors. And that's my take on Noble Corporation. If you found this analysis helpful, hit like, subscribe for more stock breakdowns, and drop your thoughts in the comments. Is Noble a buy for you? I'd love to hear your take. See you next time.